Daily high, daily low, price comes up, bounces at the daily high, British 60-minute chart. Look what happens when it penetrates this low. Watch. This low is at 75.23. The high of the next candle, 75.57. Okay, over a 30 pip bounce off of that low before price continued down. Consolidates into the next day. Support becomes resistance and down. Daily low right here. Price comes down, tests the daily low. I want to show you this. From this low right here, 73.46, it bounced as high as 88. 40 pip bounce off the low, even higher, 94. From 46 to 94, and then up to 74.25 before moving lower. Now here's our intra-week low. When I say intra-week, it is better, it is a stronger reference point if the low or the high is within the last, well, within the same week, the actual same trading week. But when I say intra-week, I also mean within the last five to 7 trading days. Okay, we use a 10-day moving average, which represents 10 trading days. But within the last 5 trading days is stronger than within the last 10 trading days. Or if it's in the same week, it's also a stronger reference point. Now, we have our intra-week lows here. Price coming down. We enter into the new session. Liquidity in London picks up, tests the lows. This is when you make the trade, when it's steering that low right in the face. You look at your smaller time frames, look to see if price is weak or flows, transactions are weak, selling pressure is weak, trade it long right there. MACD divergence. The bounce we get from the low is it's 32, and we get a bounce to 90. Okay, so 60 pip bounce. Now we have our most recent high. Price rallies all the way to the most recent high at 74.72, and it responds by selling directly down to 74.20, 50 pip, greater than 50 pip bounce lower. We have a clearly established high here. We are moving in an uptrend. A big move from 76.50 to 78.25. And then quite often what we'll get is we'll get this this bull flag come down. Asia will often make an attempt. This is Asian trading here at the vertical line. Asia will often make an attempt at the new highs and fail. So we fail here. Price comes down. The body does not form below the bodies here. And we see a real nice reversal candle formation. Price makes another attempt during the New York session at the highs, but we may not have got in that trade because it may not have been quite high enough. It was 78.24 was the high, and 78.30 was the high here. It was close. I don't know that I would have gotten in that trade, but if we watch price, it makes another attempt, 78.23 here, Now a new day starts, respecting the previous day's levels. If price holds and continues to trade below 77.20 here, which is below these body highs, that's bad for the bulls, good for the bears. If it holds and trades above this 77.20 area, then you want to be going long. If you didn't go long already here, you want to go long if it trades and holds above here, because we're going to get a release to the upside. Remember, we're in this uptrend and we're simply consolidating in an uptrend. Now this consolidation, as we see here, we've got a combination. We've got previous resistance as support, then we also have the daily lows being tested. Go away. I'm doing something important. The daily lows are being tested here. Now, if we watch price trading above this level, then that is very bullish. The more time that elapses above that level, the better it is for our trade. Now price moves. This is why you take profit. This is why you take profit. If you're going to the moon, or if you're going for the home run, then you will suffer through this and probably bail on your trade when it comes back to your entry. This is why you take profit. Okay? Now, if you've left some in the market, now you get your home run, but on a small percentage of your position. Look at this. Resistance becomes support. It's simply remarkable. Even the bounce off this support goes 40 plus pips. And okay. And again, I apologize for shaking my finger at you, but it's important that you understand this. Please understand this and make sense of the market. I know that these are 1 hour candles, and when price is just ticking in front of you, it's quite a different story. But simply watch price, and the more you stare at charts, the more you're going to get this. And when you understand the market, the FX market is your oyster, and there will be a plethora of trading opportunities for you. I know that people buy these types of programs because they want to show you the easy route, and I'll tell you, this is easy. Okay, this type of price action, this is easy. We're in a nice trend. We have good volatility. The market is making sense. It's bouncing off of good reference points. This is easy. You just have to instill in yourself the knowledge and the feel for trading by understanding the market, and that's what we're hoping to accomplish here in this program. Okay, God bless you, and we'll get you next session. A day high here. Intraday, price comes back up and attempts a new high, but look where it spikes down to. It spikes down to our resistance and support level, comes back up. New York fails to make a new high. Now we drift into Asia. I like this soft trading in Asia. Asia unlikely to make a new high, as we have this soft trading happening here at doji here, and now we see price start to drift back, and the British pound is classic for this. We get these, price will just drift back, and even just this drifting can, as liquidity picks up in the new session, just this drifting back can pay nicely. Now look at this. Previous day's low. Watch what happens at the previous day's low at 80. Do you recognize that number? 180, 80? Or just the last two digits, 80? Boom. 40 pip bounce. Okay? Boom. 40 pip bounce. Before coming back and testing again. Doesn't matter if it goes through now. Look at the bounce at the previous day's low. We are consolidating here now, and price is making a go at our good friend 180.80, and it seems very hesitant to want to move above 180.80. When we see this weakness like this, you see how price is struggling to move higher, look at how weak it is by these long wicks. Place your limit order right up here, just below 80.80, and your limit sell order below 80.80 with a stop above 80.80. Look at, boom, 180.40, 40 pips. Move. Doesn't matter if it continues up and through price now. Okay. Look at what happens here now. You see how price spiked through 80.80. This is, in all likelihood, it's probably either running stops or running options levels. But look how price trades below, moves and trades below. So if you're watching this on a 15-minute or a 5-minute chart, if you're watching the price ticks, I don't know how long price held above 80.80, but if it holds and continues to trade below 80.80, I am selling. Okay? Selling. I'm selling, selling, selling. Here, I'm selling. If price fails to hold above, that just simply means that there was, you probably ran some stops here, got some good sell orders, and started pushing price lower. Meanwhile, I still had some stubborn longs in the market or buyers coming into the market here before they finally gave way and the sellers took over. 80 pips, direct, do not pass go, do not collect 200, 80 pips. All right, we are back at 180, and we're just going to continue to watch price action in its current state. But I want to show you one thing. You see this price swing, this big, long, laborious price swing from that low, from this low to the high, all the way back to this low. It's about 86% retracement. And we make our way up to 180.80, and I don't know why price is respecting that level so much, but again, 80 is a natural support resistance level, but not as strong as the figure. All right, so don't take that one to the bank on an independent basis. Double bottom here, we make another attempt at 180.80. This is 127% extension, Fibonacci extension, which you're going to learn shortly. And you're going to come back to this so you're more clear on this, but it's an area of potential exhaustion for the market. But this is a real laborious retracement in an overall downtrend. Okay, we're trending down, we're retracing up, price is slowing down, it's capping at 180.80, where we're likely to see a further down move. Let's have another look now, shall we? 180.80, sniffing like a little beagle, looking for drugs at the airport, sniffing around 180.80, boom, didn't find anything. Back again for some more sniffing. Look, boom, 40 pip bounce. This is how volatile the British pound can be. That's what I like about it, is it's just nice, good volatility. It can pay you. Okay, we're not paying you 40, 45 pips here, but it gives us enough room to make 20 to 30 if you're good with your entries and become an effective trader by the end of this course, through which you are going to diligently study. Another bounce and a failure here could lend to further downside scenario. So intraday high, previous day is high, previous day is high, and we continue down. Daily low. We had a nice down move there, and this daily low, price retraced, boom. Look at the bounce off of the daily low, 60 plus pips. Okay. Now let's see if this low holds. It holds all right. And trading this daily low certainly paid from 78.40 to 180.40, 200 pips. Now, highly unlikely it will get to 180.80, but if it did, you would want to sell it there because look at the size of the move. Highly unlikely it will get there. And if that's the case, then you want to look for your key technical levels below 80.80. 80.40 seems to be offering support and resistance. Okay. And a bounce and consolidation at 80.40.